Hello everyone! Today we're going to talk about Bitcoin, which is currently trading around $87,000. And I have to say, the situation is ambiguous. The monthly candles are quite confidently indicating a continuation of the downtrend with a decline towards the $82,000 area or lower. At the same time, the weekly candles suggest that Bitcoin still has every chance to move into the area of $100,000 to $102,000. Let's break it down and start by analyzing the daily candles. Take note that on January 20th, 2025, Bitcoin dropped from the level of $109,588 to $78,258 as of February 28th, 2025. So, in just a little over a month. But what interests us are two important levels, 84,250. That's the level where the decline stopped. It stopped temporarily, but nevertheless it did stop. And then there was some local growth which in turn halted at the level of $94,270 at the close of the daily candle. And note that right now we're trading exactly between these levels. I've also highlighted an ascending channel. Maybe it exists, maybe it doesn't, but I drew it. Why? Because we can more or less clearly observe a trend reversal only when we break out of this channel. Specifically to the upside, because right now we're in a downtrend. I want to explain one thing to you. So, when the price of a particular asset or commodity is consistently falling, then it can potentially form either a distinct equilateral triangle pattern or perhaps an ascending channel, within which the price typically moves in a specific identifiable manner, much like this. Alternatively, it could very well be a descending channel within which the price also moves in its own characteristic way, similar to this example. In all these cases, we consider the situation as a flat. And it can be simplified to something like this. That is, it dropped, stayed on a shelf for a while, and then continued downwards. And only a breakout from this channel upwards, from this triangle upwards, or from this one upwards will mean, or at least with a high enough probability will mean, that the trend has reversed. Accordingly, the reversal point here and now will be at around $99,100. And right here, the nearest moving averages are not far off. On the daily time frame, it's at $102,000, but the $100,000 to $102,000 level didn't come from here. It came from the weekly time frame, but before we move on to that, I want to outline the target levels for a decline in case we break through the $84,250 level, and at the same time we would fall out of this blue ascending channel. What would happen in that case? In that case, we would see the emergence of downside levels like this one. This is the next stop after we break through 84,250. In the winter of 2025, this is the $78,595 level. And finally, it could be this level here, $76,239. So let's average it out. Around $77,000 to $78,000. So if we break through 84,250 and fall out of this channel downward. Now let's switch to the monthly candles and see why there's a short here. Here we had a sideways range. 1, 2, 3, 4 months in a row we were trading sideways. At the same time, two candles, August and October, set new all-time highs but closed with red bodies, which indicated a potential move downward. And that's exactly what happened. But the November candle is a full red body. A new low, a breakout from this 4-month range. It suggests that the decline is very likely to continue. And here we see the continuation of the decline forming towards the level area. This trading zone at $71,280. That's it, there's nothing else because our other level was here. Right here in the area of these lows, but we've already been here. And at the very least, we should update the November lows to $80,600. That is in December or January, but in the coming months, Bitcoin is very likely to update this low. And from the perspective of the RSI, as I mentioned, the target level is 50 and potentially much lower at level 30. And from the perspective of moving averages, we could reach not only the 50-month moving average, which is $56,000, but also the 100-month moving average, which is already around $37,000. Now let's look at the weekly candles. On the weekly candles, the situation can't be called the opposite. Notice, we have a drop here and then a sideways movement. This red candle that started on November 17th was not fully engulfed by a green one, whether by one or several. In other words, we are trading within the range, within the body of that candle. but what is stopping us from falling further? It's this 100-week red moving average, which is located around the $85,500 area. Accordingly, as long as we are trading above this average and as long as no weekly candle has closed below it, we still technically have a priority towards the area of the green 50-week average, which is around $102,000. That's where the 100 to 102 range comes from, because 100,000 is a psychological level and 102,000 is the level of the 50-week moving average for Bitcoin. So what are we waiting for? We are waiting for a bullish engulfing pattern on the daily candles in order to confirm or at least suggest an upward movement. But for now, pay attention. The growth, the rise on December 20th and 21st was completely absorbed by just one bearish candle, December 23rd. And by formal indicators, we have a downtrend even on the daily candles. That is, we have a downtrend on the daily, a downtrend on the weekly, and a sideways or downtrend on the monthly charts. For now, unfortunately, there can be no talk of any buying.